Netflix has hinted it will crack down on households sharing passwords as it seeks to sign up new members following a sharp fall in subscribers. Some 200,000 people left the streaming service in the first 3 months of the year as it faced intense competition from rivals. Netflix warned shareholders another 2 million subscribers are likely to leave in the 3 months to July. Shares in the streaming giant plunged more than 25% in after-hours trading, following the news wiping off more than $30 billion off the company's market valuation. My goodness. Longi Dafur is going to help us make sense of this. He's an analyst with Financial Derivatives Company Limited. Longi, you're very welcome. Good morning.
Pleasure as always. Yeah.
What happened? What happened to Netflix?
It's crazy, actually. I mean, this, without a doubt, was a critical hit to the Netflix growth story, but then it is definitely not the end.
Okay.
So what caused this, like you asked? Key thing, Russia, Ukraine. So like we know, the war happened and Netflix decided to pull out of Russia. So it lost about 1 million subscribers like that at a go. That was a huge hit to the company. But then, like you said, Netflix is also forecasting that it plans on losing 2 million subscribers or so down the year before July. So it's not just the Russia thing. And what is really driving this is a combination of different factors. One of which is account sharing. So Netflix estimates that out of its 220 million or so global subscribers, it's reaching an additional 100 million subscribers based on account sharing alone. So these are exactly 100 million households.
That's 5x
just
lost. Yeah.
Tapping into the service for essentially free. So this is really weighing on Netflix's income and potential revenues. Now, apart from account sharing, there's also the thing of inflation. Inflation is real. Consumers are looking to cut costs. One of the costs you're looking to cut is, of course, externalities, entertainment costs that they might not typically be using. So Netflix might be the first to go. So those are some of the factors that are really weighing on Netflix.
All right, good. So Russia, Ukraine, that's affecting a whole bunch of people. Inflation is affecting everybody. We went through the Germany numbers, producer price numbers a few minutes ago. So is this, you listed all these factors, is that limited to just Netflix, or is everybody else going to be facing, in the streaming game, going to be facing these kind of pressures?
Yeah, we expect it's not just limited to Netflix, and the market believes this as well. After the Netflix announcement yesterday, stocks of Disney, Warner Brothers Discovery traded down because investors believe that, if Netflix, the market leader in this industry, is going down like this, it's also likely to affect other players. And same thing, like I said, inflation. Consumers are looking to cut costs. In the UK, first 3 months of this year alone, about 1.5 million households cut their streaming subscriptions. And 38% of them said it's because they wanted to cut costs. They're looking for how to cut back on expenses. So consumers are really looking for how to avoid inflation and prevent inflation from squeezing their wallets, and entertainment and streaming costs might be the first things to go. Yeah.
Interesting. Ad strategy. For a while, Netflix has been resisting, I think, lower cost ads, and now it seems like they're going to be exploring that option. What's the impact there?
Yeah, it's actually really big for the company. The key thing there is revenue diversification. Over the years, Netflix, like you said, has been resisting. Netflix co-CEO Reed Hastings actually came out to say that he is not really in favor of, he has not previously been in favor of the ad strategy. But now going forward, there's no reason why they shouldn't give their consumers the choice of that. So the ad strategy would allow Netflix to provide a lower tier for its consumers, for consumers that are more ad tolerant. So what this will do, it will allow for the attraction of new subscribers. It could possibly allow for subscriber retainment, and to also give consumers more choice to view the streaming platform without needing to necessarily worry about costs.
What do you make of them waiting until they've announced 200 million subscribers being lost and projecting 2 million being lost by Q2 and the stock dropping 25% in the aftermarket trading? So now announce, okay, it's now we want to look at this ad strategy. Is it too little, too late, or better late than never?
I'd say better late than never, to be honest with you. But the truth is, Netflix really needs to go back to the drawing board and restructure their whole business plan from the ground up. And the company has actually already been doing this. It's been making plans. It's going into gaming. It's going into more interactive content. It's looking to diversify its revenue more. And one of the key strategies for this is the emerging markets. It's making big pushes into APAC, Asia Pacific area, into the EMEA, and these are the real income streams. These underserved markets are really going to help Netflix push up its revenue in the long term.
Okay, cool. You know what? I asked you earlier whether the challenges Netflix is facing is something that the industry is facing. These particular diversification of revenue streams that you've mentioned and going into new markets, is the rest of the industry going to have to look at that strategy as well?
Yeah, definitely. And we've also seen different streaming platforms. I believe HBO Max has also been looking to launch in Africa. I believe it has already launched in Africa.
Disney Plus is coming to South Africa. Right.
Exactly.
Yeah.
So these are huge income streams, and it also goes beyond just launching, looking to create content specific to these areas. These are things that really attract subscribers and really keep retainment up for the streaming service. Yeah.
Great stuff. But back to Netflix, they've been partnering with Nollywood producers for local content here in Nigeria. Do you see this stumble with the stock price and subscribers and so on? Would that in any way impact the relationships that you're trying to build, here in Nigeria and others?
Yeah, I believe it's actually going to be beneficial because, like we said, Netflix is more than actively looking to tap into these underserved markets. I believe there's about 700 million global households that have access to broadband. With just Netflix has a subscriber base of just 220 million. So there's a huge market there to tap into these underserved markets, most especially in Africa, Nigeria specifically. And like you said, the company has already been doing this. I believe in, was it about 2016 or so, or 2020, the company bought the rights to Lionheart, in a popular Nigerian movie. And since then, the company has come a long way, collaborating with Nigerian directors, releasing movies recently. I believe a Citation, and just a bit of some of these movies that Netflix has really been going the line to build. So I do believe it will be beneficial in the long term for collaboration and creation of content with these domestic and Nigerian Nollywood producers.
You see others. I think Arise Play has some competitions that it's creative competitions that it has right now with local players. That's Arise Play. Amazon Prime, I know is also doing the same. I think Amazon Prime has some collaborations with a couple of producers. Is that also, again, every question I'm asking, I'm proliferating to the rest of the industry. Is that also something that the other players are going to, have to continue to do as far as these collaborations are concerned?
Definitely. And the streaming wars are real. Competition is real. So this is definitely something that other players will be looking to do. And keep in mind, they aren't just competing amongst themselves. They're competing with services like YouTube. They're competing with cable TV, DSTV now. And that's huge competition
the Senate is chasing DSTV.
Exactly. Actually, if you think about it, I think the inflation thing and the pricing point actually plays a big role. So I believe DSTV premium goes up for about 21,000 naira now. 23,000 naira now.
Almost 24,000.
Exactly.
Yeah.
Netflix's premium subscription in Nigeria is about 4,400 naira.
Right.
Even if you add the cost of internet on that, let's say about 12,000 naira. So that's 16,400 naira. So that's 22% differential to the 23,000 that DSTV offers. So that's huge upside for Netflix. There's huge room for growth in these underserved markets. So Netflix's stumble is definitely not the end. Yeah.
Looking forward, as far as growth, the war is still going on, inflation is still high, these challenges are still there. What's the road ahead at 2022 for Netflix and other streaming giants? It's still going to be rocky or uneven? How do you see it?
Yeah, so it is likely to still be rocky, like we said, inflation, war and stuff. But then one thing we should keep in mind is that growth this year is being obscured by the huge surge in subscribers that the company got during the pandemic. So that is really obscuring and, shall I say, clouding the way we see growth for the next few years. So this last year, 2021, and this year, 2022. So that is something that we should price in when thinking about growth going forward.
Finally, what about movie theaters? Fantastic Beasts just came out, the second or third installment. It kind of bombed. $200 million movie, only made about 40 million. The theaters, I know the streaming services, in your view, are they still a big threat for physical theaters?
They are a huge threat for physical theaters because we've seen streaming services winning Oscars. Apple TV won an Oscar with one of its movies just
Best Picture.
Best Picture, exactly. Netflix won Oscars, was it last year or the year before?
Yeah.
So the streaming services are upping their game. They are pouring huge amounts of money into film production and so on. And this is really going to affect the theaters. And also, if you think about it, companies like Apple and Amazon are also benefiting from economies of scale and their operations because they can they can easily pour money from their other companies into their streaming services and boost and prop things up. So yeah, it's crazy.
It's all fascinating. It's
Yes.
crazy. It's everything's all happening at once. Longi Dafur, analyst with Financial Derivatives Company Limited. Thank you so much for joining us.